Hi everybody, today I'm delighted to be speaking to Lee Lloyd about how European companies can access North American private equity investment opportunities. Lee has an amazing background. He's a qualified accountant, a qualified lawyer, and an ex-Goldman Sachs banker, so he knows this market like the back of his hand. He now runs his own business, assisting companies looking for PE investment or to exit to private equity investors. And I'm really delighted he's made the time to speak to us today. Lee, welcome to the chat.
Thank you, John. I'm delighted to be with you today.
Thanks. So Lee, perhaps you could start by giving us a short overview on what the US private equity investment is like at the moment.
Sure, John. So last year marked the second straight year of lower deal volumes for private equity following the record-breaking year in 2021. This is due primarily to higher interest rates and tighter debt markets in the US, but fundraising still continued, however, and dry powder for U.S. private equity firms ticked up to $956 billion of undeployed capital, which is a new all-time high for the industry. PitchBook calculated the median hold time for U.S. private equity investments exited in 2023 at over 6.4 years. That's the longest holding period in the history of private equity, and PitchBook tracking that. So unsurprisingly, limited partners have increasingly communicated their desire for PE firms to create liquidity and exit some of these investments before they make new commitments of capital. So I think deal makers are expecting a robust market for private equity firms looking to seek liquidity from their portfolio investments in 2024.
That's really interesting, and presumably that will turn into then further investment opportunities as they're looking for those final couple of add-ons to allow them to maximize their value on exit, or once they've realized cash, they'll want to get their new funds out of the door.
Exactly.
Excellent. And so when a UK or European company is looking for private equity investment, I guess the first thing they're going to need to consider is what the decision-making criteria of the funds might be. There's no point spending time with somebody trying to get investment from them if you're just known to just not going to fit their criteria. So how are US, Canadian private equity houses approaching that kind of investment criteria question at the moment?
Well, in the last 5 to 10 years, most middle market PE firms have become much more proactively focused on preferred industry sectors. They've developed specific investment theses. They've engaged business development professionals to pursue those sectors, and they've engaged executives in residence and operating partners for business development and board roles. So this focus in particular sectors is a pretty significant evolution, and needing to understand which private equity firms are focused in your specific sector is really important. Now private equity firms will invest in multiple platforms in a specific sector. That used to be frowned upon. It was a conflict of interest, but now it's viewed as being sector experts, and they use that to help fundraise and differentiate themselves from other private equity firms seeking capital from institutional investors.
That's really interesting. And when people are looking at how to access these investors, is there a difference between how you would go about that if it's a platform transaction or if it's an add-on transaction? And maybe we should just quickly speak to what the difference between platform and add-on is.
Sure, John. So platform acquisitions are usually they're larger first entree into a sector where they're going to invest in that company's management team and their infrastructure to be a platform for doing additional add-on investments. Platform acquisitions are noteworthy because they typically get higher valuation multiples than add-on acquisitions. Their management team usually has the senior executive roles. Their management team often has incentive equity programs, so they're participating, and they often have opportunities for rollover equity investment as well. So a platform acquisition is the most favored place to be in the private equity ecosystem. Add-on opportunities can be good opportunities if you're smaller, and they typically will get lower multiples, but become part of a larger platform, often then get access to a larger customer base, larger sales force, different channels, and then we'll share in sometimes in the incentive equity programs as these companies continue to grow and ultimately seek exits.
Right. And so when your fund is looking for that first platform acquisition, what will it be looking for as opposed to the add-on?
Yeah, so I'd say that first you need to be of a certain size. So if you believe that you may be a potential platform investment opportunity, or you want to build your company to look like a potential platform investment opportunity, one, in looking at the right partner for you from a private equity firm perspective, you want to look at the private equity firm's sector focus. As we just discussed, you want to look at their geographic focus. I'd say that North American private equity firms are now increasingly comfortable with European investments in sectors they understand. That was not the case probably even 10 years ago. I also would say that as a platform investment, the deal size and the EBITDA range, the minimum maximum equity investment a firm will make, they often publish this on their websites, and so you have access to this. I typically divide private equity firms' fund size by 5 to 10 platform investments, and then you can back into what amount of capital they're generally allocating per platform and figure out whether your company size is a good fit for them or not. I'd say that PE firms make very few exceptions to their size requirements because they don't want to invest too little money in too many opportunities and spread themselves too thinly. And then conversely, they also have restrictions sometimes from being overly concentrated in one platform or another. And so those size criteria are something I pay a lot of attention to.
So it sounds like you need to be fairly big, and there are fairly strict criteria around platform acquisitions. When it comes to add-ons, are they typically driven by the private equity fund or by the management team of the platform? And how would you go about kind of identifying the right fund for you if you think you might be more in that add-on space than a platform?
Well, John, that's a very good question because so many firms in North America now are backed by private equity. And so a question for advisors to potential add-on companies is, who's the decision maker here? Are the private equity firms driving the decision making, or is the management team essentially been vested with that responsibility to go out and do acquisitions with the PE firm's capital backing? And so understanding that dynamic is important, but I would say that, PE firms, if you're looking to access PE firms, you can look at their current holdings to see what platforms and what sectors they're currently in. But if you inadvertently look and find through industry research a strategic company that you think is a good acquirer for you and they're PE backed, you have relationships with that management team or at industry trade relationships, then you can pursue that as well. I would say from a size perspective, add-on acquisitions, there is comfort generally around a wide range of sizes. If you are a acquisition target that brings additional revenues, additional profitability, additional growth opportunities, good management team expertise, then that can be attractive no matter your size. And so unlike platform investments, add-on opportunities, PE firms will be very flexible.
That's really good to know. Lee, that was a really useful kind of initial introduction to this subject, and I saw you speak on it for an hour or so a couple of weeks back, which was fascinating. One of the best talks I've seen for a long time.
Thank you, John.
If people are interested in the subject and would like to hear more from us on it, please let us know. And of course, if you are in a position where you are thinking about raising some private equity investment or exiting to private equity, and maybe would like to look outside the UK or Europe to North American funds, then please do get in touch with Lee or get in touch with me, and I can make an introduction to him. And it might be that he can help you with what you want to achieve. Lee, thanks again for making the time to speak to me today. It's been really interesting, and I really appreciate it.
Thank you, John, and thanks to you and your Kingsley Napley colleagues for allowing me to be with you today.
Thanks. See you soon.